Time now for the markets. Here's Zac Ashmore with an abbreviated report, short and sweet. Zac?
Thanks, Mike. Markets went up, then down the past 2 weeks. That kind of instability, a reflection of uncertainty on multiple levels. We'll be talking about why in just a bit. For now, let's take a look. Not too bad, plenty of red, but there's some stability too. Biggest gain? Cattle up $2.35. Biggest loss? Wheat down a whopping $21.75. Many factors at play here. Analysts say wheat's been in flux since the beginning of this virus outbreak. People still comparing prices to where we were last year at this time.
I think mostly the selling this week was to do with the technical stance. You had the Kansas City contract take the brunt of the selling. After that contract took out the 200-day moving average. And you've seen the funds here switch from being long to going short. I mean, they're only long about 3,000 to 4,000 contracts. That's down a lot from recent levels. So next week it's going to be key. Chicago contract right at $5. Early weakness next week probably needs to be sold because it could be open up another door to 15, 20 cents lowers and test the March lows.
Well, I think when you look at the Kansas City wheat, I mean, our ending stocks on wheat, Paul, are still no shortage of any class of wheat, whether it's hard red, soft red, spring wheat. We're a little bit dry in the western corn belt, in the western part of Kansas. That's a little bit of support. But, you know, it's that time of year where we're not that far away from harvest. I would say the positiveness on the wheat market, all classes, is the fact that it's dry in parts of Europe, dry in the Black Sea area. And so we're going to watch those guys the next 2 weeks, see what happens. But we're marching to a crop right now.
As we reported earlier in the show, the beef industry full of activity from producers to packers. Markets reflecting that too. With beef up the past week, experts say don't get used to it. There's still plenty to go around.
It's going in the right direction. I mean, we've had this week, we estimated about 495,000 head killed. That's 60,000 more than just a couple of weeks ago. So the kill chains are speeding up. That is a good sign. But where do we go from here? We'll just have to see if the packers continue to pay up. They paid up this week. Cash trades were anywhere from 110 to 120, 100. But are they going to continue to pay up as that wholesale beef prices continue to move lower? And we'll just have to see it in moving into the future.
The other thing that's happening is there's a real disconnect. We're backing up cattle big time. Weights are on the rise. So there's some, we may carry this thing over for a long time. And the government had something to say about it on Thursday. They put some numbers out. They're basically saying from now until April of next year, you're in a $99 to $100 cash market. So we're trading 115, 116 now. You have to be a little bit careful when you're looking at the government numbers. We're still trying to unthaw. We're still not sure what the demand is. So it's a buyer beware market.
And that's it for a deeper look into the markets. Based on all that, I predict we're seeing a return to abnormal. Let's hope it sticks.